Joining me now is Tom Hancock, portfolio manager of the GMO U.S. Quality ETF. Tom, what are the names you like most?
Well, we kind of like the stocks where we feel like the AI application is most proven. And starting at the top, Meta, we saw with their Q2 earnings how much benefit they're getting now in targeting ads and delivering ad content. And if you go down below that, think about custom silicon. That's what the really big spenders who are really looking to solve a specific problem are going. And then Broadcom would be the way to play that. And then going down below that, think about like a Taiwan Semiconductor, the foundry that serves Intel. They also serve Broadcom. They would serve any other entrant into the space like AMD, maybe even Intel, who knows. And if you go to even beyond that, the semi-cap equipment companies are things we like too. So there are a lot of ways to play this. One thing I actually think about, there's a recent report out of MIT that was saying only 5% of AI projects were generating a return. There's a lot of stuff that's being tried now that isn't going to work. And so really being able to bet on the 5%, which you think is the big guys, that is going to be a key, I think, to making money in AI.
Yeah, people tried a lot of things on the internet that didn't work either, but the internet still ended up being a pretty big deal. So tell me, of these names, a lot of them have gone up quite a bit. Which are the most underappreciated, if any are?
Well, the most underappreciated ones are probably ones I haven't mentioned, which, as you say, have all gone up a lot. But we take kind of a contrary view on a stock like Accenture. People are taking a negative view on it being an AI victim, displacing, outsourcing. We actually think there's going to be more of a demand for that because people go to Accenture to figure out how to do their outsourcing via AI. And as people migrate or implement AI systems, we would see that actually as a winner. Of course, the market disagrees with that so far. Of the names I mentioned, maybe I'd highlight ASML. So ASML is semi-cap equipment. They specialize in lithography, the very leading edge miniature chips that have been kind of tied to the smartphone market historically. Of course, smartphones aren't doing all that great right now. But one of the reasons to miniaturize is to really get the most power efficiency. And so while AI chips haven't currently been on the leading edge, we think they're going to have to move there going forward. And ASML, which has been lagging a little bit, they have a little more Intel exposure, which has been holding them back. We think they're going to be an AI winner longer term that's maybe not so appreciated.
Back to your Accenture mention, I was talking to somebody at one of the big consulting firms recently who brought up something that I found really intriguing, which is the idea that AI could allow those companies to actually deal with more mid-market and smaller clients, opening up new potential revenue streams because it enables them not to have to depend so much on that bottleneck with people. Do you think perhaps whoever figures that out in the consulting space perhaps takes a lot of the benefit here in AI?
Yeah, I mean, generally, that's what AI, the promise of AI, right? You can leverage your workforce and do more and scale out and have fewer people have more points of contact. I think Accenture, by virtue of their scale and technical expertise, is certainly, I think, the best bet to figure that out.
Now, moving more broadly to the macro and the Fed, any concerns you have about the headlines and moves that the administration is making there?
Yeah, I mean, how could you not have concerns about that? I think one thing I take heart in is I do think Chairman Powell has done a good job maintaining a steady demeanor. And I think Fed independence is actually pretty strong right now. I think the market's fairly convinced about that. I do think the market is willing to sell its soul a little bit and cares more about low interest rates short term than they do about Fed independence, which I think is much more important longer term than whatever happens with interest rates at the next meeting. But I do feel this is a storm that will pass, so I'm guardedly optimistic here.